Walt Disney, Pampered Chef, Oprah Winfrey, big banks, big corporations, the Rockefellers, what do they all have in common? What they have in common is they all used overfunded whole life insurance, and they continue to keep using overfunded whole life insurance as a key asset class in their overall personal and business financial economy. So the question is, if all of these people in corporations with massive amounts of income, wealth, net worth, money, resources, is it meant for just the rich? That's the question that I get asked quite often. Is this concept meant for only the people with mega needs for massive death benefits? So to answer the question, is this for the ultra wealthy? The answer is no, but with a caveat. This is for a couple people. One, I want to start off and preface, this is super ideal for people with cash flow. Now, I'm going to rewind a little bit and tell you who this is not for. This is not for people that are living paycheck to paycheck. This is not for people that have high interest credit card debt. This is not for people that are undisciplined. Let me backtrack and tell you why those things that I just listed off are not for those individuals. So this is not for somebody that has high interest credit card debt. Why? Well, when you have high interest credit card debt, typically you're paying around 22 to 26% interest. And if I have 22 to 26% interest that's eating away at my household economy, there's a really good chance that overfunded whole life insurance isn't going to help you, because as one asset class is growing at a conservative rate, another asset class, essentially liability, is bringing your household economy down. So what you'd be better off is attacking that high interest credit card debt and bringing that down as fast as possible. Two, this is not for the undisciplined. Why is this not for the undisciplined? Well, it's not for the undisciplined because when you use your policy, when you borrow against your cash value, there is a control cost to being able to borrow against your policy. And when you do so, there's debt. That's essentially what overfunded life insurance is when you're using it to leverage. You're using it for leverage, right? We talk about in business and real estate and money in general of using the concept leverage. It's talked about in business all the time. Leverage can be a very powerful tool in used in the right context, but leverage can also be extremely deadly weapon if it's used in the wrong context. Thirdly, not for somebody that's living paycheck to paycheck. Why? Well, it comes back to the very first reason who I said it is for. It's somebody that has tons of cash flow. If you are somebody that is living paycheck to paycheck, what you need to do is figure out why you are living paycheck to paycheck. Is it due to the amount of income that you have coming in? Is it due to the high expenses that you have? It's really only one of those two things. Is it a lack of income over expenditure on my expenses? If it's a lack of income, what you need to do is you need to go out and find a skill set that's going to improve your cash flow. You need to find something that can increase your cash flow. Find the skill sets. Use YouTube, books, Google to increase your skill set. Get around mentors, the right people. Essentially dive into hardcore improving yourself. Be your number one asset. You are your greatest asset. Improve your cash flow. Second, find the efficiencies in your household economy. Are you paying too much in debt? Are you paying too much in taxes? Are you putting money towards the wrong thing? Like think about intentionality and purpose. If you are somebody who wants control and you're an entrepreneur and you're putting your money into a 401k, well then conceptually you have to ask yourself, like, why are you doing that? You lose all control putting in your money into something like that. You can't touch it to your 59.5, and then you're gonna have to pay taxes on the larger amount that it grew to at your ordinary income level. So if you're 25, 30, 32, 40, you essentially are limiting the control that you can use those dollars for something greater, to improve your skill set, improve your knowledge, to go build a business, to go buy real estate, other things that can go improve cash flow at a higher rate. And then lastly, when we're looking at our expense costs, like what are those things that are eating away? Is it our bad habits? Is it detrimental habit? Is it going out and partying, spending time with the wrong people, spending money on drugs, alcohol, addictions, anything that's a vice? Right? You have to really audit what you're spending your dollars on at the end of the day to improve your overall cash flow. Also, this could be very controversial, but in my opinion, this is ideally for the entrepreneur, right? So in my mind, I'm thinking of somebody who wants control to be able to use their dollars for something bigger and better, to go ahead and improve their lifestyle, to live an intentional life, to improve society. I'm not saying this isn't for W-2 employees whatsoever. You just have to ask yourself the question, if you're a W-2 employee, what's the context? If you want it for a permanent death benefit, I think that's amazing for anybody, right? If you're W-2, if you're an entrepreneur, the concept around having a permanent death benefit is super powerful, to pass down a legacy, to be able to replenish a trust, to be able to pass a large lump sum of money to somebody else, be charity, churches, whoever you find of value. I think that's a very powerful thing. But for most W-2 employees, if they're not trying to get out of the rat race or their W-2 job, likely you're going to be using other tools for retirement. The reason why life insurance can be such a powerful tool for the W-2 employee, that's using it in conjunction with their stock market or their assets that are essentially associated with the market, is things like the volatility buffer. So essentially when the market crashes and the market goes down, you don't want to be taking income from your market-based accounts. You want to be taking cash flow from a different resource, such as your and asset / overfunded whole life insurance. That's a volatility buffer. Then when the market recovers, then you can start taking income again from your stock market account or 401k, Roth IRA, something along those lines. That's anything associated with the market. So for the and asset, I truly believe that this is such a foundational asset for a majority, but I really believe that this is super powerful for entrepreneurs because entrepreneurs want control. They appreciate control. They want a place to put to get tax advantages. They don't have a place to store money except in the bank account. When they put it in the bank account, they're losing and eroding to inflation and not getting any growth in their dollars. So why not be able to have an asset that can grow, compound, we can save and use our dollars at the same time in our business, in real estate, to go ahead and improve our lifestyle and live an intentional life. Lastly, in my opinion, this is something that is for the wealthy when it comes to the mindset. If you have an abundance mindset, and I think that whole wealthy concept comes to health. You cannot get this policy, this overfunded whole life insurance, if you are not a healthy individual. The life insurance company is going to run an analysis on how healthy you are. And based off of that analysis, they're going to either approve you for an extremely healthy rating, an average healthy rating, below healthy rating, or they essentially could deny you. And if they deny you, then you just can't get life insurance at all. So in summary, is overfunded whole life insurance / the and asset for the ultra wealthy? The answer is no, but cash flow is king and mindset is everything.